Malik is the CEO, and Amir is the PR manager, and they are becoming the world's most efficient Bitcoin mining farm. And right now, they're going to be speaking from experience because they are currently in their own ICO period. So please welcome.
Thank you. Thank you. Before I begin, everyone, I just want to introduce Malik because Malik has come all the way from Kazakhstan, and he had the vision for what I'm about to tell you. So I just want to personally introduce Malik and thank him for coming out, and I think you guys will be excited. So my background is, well, it feels like I'm talking so loud, but I guess I'm not. My background is equity markets, and the transition that I made from equity markets into the blockchain was a really cool one because I had good knowledge of securitization, the bond markets, equity, and stock markets in general. And when I decided to get into the blockchain, I kind of wanted to find the almost safest kind of cash flow generating area of the blockchain. I knew there was going to be a lot of 10x, 20x, but I wanted to know what was the safest kind of stable investment. And not only did I find that, but at the same time, this is the type of investment or the type of financial instrument that is going to disrupt capital markets in general. And that's a big statement. So real quick, before I get into that, I want to show you a 50-second video. Our mine is located in Kazakhstan. It's privatized land. Malik owns it. And it is built in a former Soviet military bunker. And what's really cool about this is that it keeps a natural temperature of 12 degrees Celsius. So there's very limited cooling cost. And the power is 3 cents per kilowatt hour. So there's two elements that are, highly for us. And because Malik is putting the asset into the ICO as a free asset, there's no rent and there's no mortgage. So that's kind of where I coined the term the most efficient mining farm. So let's just take a look at this real quick, and then I'll continue.
Hey, what's up, everybody? I want to introduce our project Ice Rock Mining.
We're trying to make mining sexy. I think we're doing a good job. Yeah, that's pretty cool. Thank you. So there was a gentleman up here speaking earlier, and he said, when I want to get people to learn about Bitcoin, I don't talk about the double spend problem or the Byzantine generals problem. I just say, let me give them some coin. And I understand where that's coming from. But I'm going to take a different approach. And actually, I'm going to talk about the double spend problem and the Byzantine general problem. And the reason why is, if you don't understand what these two solutions are, you're not going to understand the importance of the blockchain, and you're not going to understand the potential implications of the blockchain. And that's really important, because once you understand the implications, you can begin developing your own idea about how the blockchain will disrupt various industries that you know. Now, the industry that I know is the financial market, so I'm going to talk about how they're going to disrupt the financial markets. So, real quick, double spend problem is basically a computer science problem. The blockchain solves it because Up until the blockchain, you couldn't be sure that if you had a transaction, let's say a Visa transaction online, you couldn't be sure that that was the only transaction and there wasn't a duplicate somewhere. And what that fact gave rise to is the necessity for centralization. It needed to have Visa there as the responsible party and centralize that information and that data and provide you with trust. That's why the blockchain is called a trustless system. Now, the next problem, the Byzantine generals problem, is basically there's a city and there's 4 generals, but these generals can't talk to each other. So the only way they're going to siege the city is if they all attack at the same time. But because they can't talk to each other, they're not able to attack the city. The blockchain solved that through what's called the peer-to-peer network, where information is immediately distributed on the network and verified. Now, why is that so important, especially to financial markets? That's important because what that does is flatten out the hierarchical financial system, where you've got the banks, financial service providers, other intermediaries, Western unions, all of that. That all gets flattened out. And that is how the blockchain is going to disrupt capital markets. Now, I'm a little old-fashioned, so I've got to look at my notes here. One second. So we talk about Bitcoin price and what is it going to do and all of that. And I just want to give some perspective on that. The market cap of all cryptos is 500 billion. The market cap of equity markets is, I think last time I heard, 160 trillion. 500 billion, 160 trillion. That money is going to make its way onto the blockchain. And we are talking about a massive amount of money that's going to come in. I don't know how long it'll take, what the chart is going to look like, but I'm here to say Bitcoin will be well into the millions over the next 10 years. Because of what the blockchain provides. Bitcoin is just the currency, the value, the layer of value on top of the blockchain. So let's look at mining. What do? We are the data processing center for the network, right? You do a transaction, a miner uses the ASIC miner, processes it, secures the network. It is a very, very basic, stable function. So for those of you who are in the markets, you can kind of make an analogy. What would the stock market or equity market equivalent of Bitcoin mining be? Who would we be if we were on a stock market? Does anybody have a guess? Yeah, but more specifically, anybody? Go ahead. Market what? No? No? Anybody? Okay, so look. What are we doing? We're processing data. We're providing a very basic service. We would be a utility company. We would be like a power company or a water company that's delivering a very basic service to you. Or a REIT, a real estate investment trust. And we don't call it a dividend, but essentially we're sharing, we're using investors to raise capital and then provide them with the returns. Now, a REIT or a utility company, the annual yield on that is about 6-7%. A junk bond is like 10% a year. And here you come to the blockchain, and you look at miners, and now I'm talking about miners in general, and they're generating returns of 5, 7, 10, 15, 20% per month. Per month. So look at the difference in these two capital markets, where risk in the equity markets gets viewed as, a junk bond will get you 10% a year. And here on the blockchain, a Bitcoin miner performing a very stable and basic service is doing 5, 10, 15, 20% a month. That's what you call market dislocation. And that's what hedge funds love. They love when perception and reality are completely diametrically opposed. And they see that, and that's when they attack. Because what happens is, they go in, and that capital bids up the price of that cash flow. So the price of the bond goes way up, the yield goes down, and eventually it gets sold to someone who will accept 10% a year. So this is our opportunity, your opportunity, because the street is behind the curve on this one. You're ahead. There are all kinds of miners out there, but this is a very basic function of the blockchain, one that you can measure, understand risk, understand reward, and it's a dislocated market. Now, I'm open to questions because I could talk about a few different things, but I'd like to be able to give you guys an opportunity to kind of see where you want to take it. Are there any questions so far? Nothing.
Where is the facility?
Okay, so let's talk about that a little. So it's in Kazakhstan, which is near Russia. Now, land in Kazakhstan was privatized 10, 15 years ago, and it's a former military bunker. That's where it is. Yeah, in terms of government, the president of Kazakhstan has already come out and said that he wants to create a crypto valley in Kazakhstan. And I think actually, just to add to that, countries that embrace the blockchain are going to experience economic growth and opportunity. And I think what you'll see is the larger countries of the world are going to be more interested in regulating it and controlling it because that's their power. They have a power structure already. The blockchain is a threat to that power structure. Whereas with up-and-coming countries, let's say second world countries, where they want to develop, they'll embrace the blockchain because it'll do for them what a central bank couldn't do, what fair economic exchange couldn't do. So that is another very powerful implication of the blockchain.
Electricity is cheap, but how consistent is the supply?
How?
Could I ask that you step to the microphone to give us a question, because we're recording this session for the benefit of those that are not able to attend, and so we want to be able to capture your question. Thank you.
You mentioned the electricity is cheap, but my question is, how consistent is the supply?
So there's a dam next to the property. It's state utility. Kazakhstan is known for being an industrial country, coal, oil. It's not clean energy. I wish I could say it was, but it's not. But it's very stable energy. Now, I want to see if we can...
Can I ask what sort of mining you're doing? Is it GPU?
No,
or
it's
ASIC? Just ASIC?
ASIC mining, yeah.
And how long do you expect that hardware to last?
Good question. So we'll look at anywhere from 12 to 24 months, I think a little bit longer, but I'll just give you that window. And one of the things that we've done is we didn't want to do cloud mining because you've got a 2-year contract. And think about how cloud mining really works. The company has to sit there and say, how much of our margin can we give away while still making the profit we want to make? There's a little bit of a conflict of interest between them and the customer. We kind of said, you know what, we're going to do a token. Management will also own the token, and everybody is a quote-unquote shareholder, so interests are all aligned. We want to maximize profit. So that's an important aspect. The other thing is that we took 20% of cash flow, or BTC flow, to reinvest in updating the miners. So we're going to provide longevity to the mine life. And that 20% doesn't come out of the investor's 50% distribution. So you're getting that, and you're getting the 20% that's getting invested into keeping the mine going. It's a powerful combination, and much better than cloud mining.
Where do you see the mining trends in terms of the next 2 to 5 years? And also, do you see the profit margin, like you spoke about the ROI, will that be eroding in the next couple of years?
Next 6 to 12 months maximum. That's going to erode very quickly because you've got a lot of capital. They're going to understand what this is. Now, mining will expand because there'll be other coins. And so people, the enthusiasts and the guys, the techies and computer guys will go after those other coins because they know what function they service on the blockchain. But when you're talking about the big boys and mining Bitcoin as a data center type of activity, that margin is going to go away. As soon as the money comes in, it's going to start chasing it, and yields will go down, and the margin will go away. And those people will make money because they took advantage of the dislocation. And then at some point, it'll just stabilize, and it'll be like a utility. Because that's what it essentially is.
So my question is, essentially over the period of time, what happens is that the hash power, there would be more powerful rigs would come, and the value of the existing infrastructure would drop. So how are you going to compensate that loss?
Yeah, so, look, we're commercial miners. So we're playing in the same field as everybody else, and we're going to how we allocate capital is the key to our profitability, and we know that. So Malik is very well connected on in that part of the world, and that is something that we put a lot of focus on, because that's the engine, is efficiency, both in terms of cost structure and in terms of hash power. So that's just a business focus. That's my answer. It's something very important to us.
So how many customers you have, and are you planning to expand your facility?
So I won't go into the customer base, but we're absolutely expanding, and we're looking at projects close to us because the natural elements just come together. We've got a factory in Kyrgyzstan that's a former textile factory, 3,000 square meters. It's already got power coming into it. It's cold. Now that structure will cost a little bit more because you're going to have the cost of the property and you'll have the cost of cooling. It won't be that much because it's so cold there to begin with. But our vision is to provide people with the opportunity to take advantage of this dislocation. That's what this is really about. Mining is not a sexy business unless you're mining in a cave. But
yeah,
right?
That's true.
Then
That's
it's
true.
sexy.
Yeah, and the last question is, for the existing customers, are you leasing rigs or are you reverse leasing rigs?
You said leasing rigs, right?
Yeah.
No, because you see, our view is we want to mine. We believe Bitcoin is going up. We believe these returns are going to get better. So we don't want to lease out rigs. We're happy to share income with you. You guys, the investors, are fueling our growth. They're providing us with the capital that we need to scale the business. Great, come in and we're partners. But We're not going to go out there and find these key assets and then try to maximize your income. We want to maximize our income, and we welcome you to do
All
that.
right, thank you.
One other question I'd like to ask, Amir. You said earlier, and I think this is very insightful, that you believe this is a way that many second and third world countries can leapfrog into the developed world. Absolutely. And I think that was very insightful. So that, for me, invites the question, what is the government of Kazakhstan doing to incentivize this kind of investment and this kind of activity within its own borders?
So in mining in particular, they don't have to incentivize anything. They've already given us everything we could ask for. Land is privatized, business enterprise is allowed, and power is very cheap. So, you know, I guess we could ask for more, but, you know, I'm not so sure they would give it to us. But what they will do is look at the other applications of blockchain to help their economy and spur growth. And a lot of countries will do that. They will embrace it. It's no coincidence that when you look at the type of G20 type of countries, they're more reserved, or the G7, they're more reserved. It's because they have the power. It's because they are the central body. They don't like decentralization. It's such an important thing for us to keep in mind. And the way you're going to perceive that and see that unfold is really important for your own development and your own ideas about the blockchain. But the blockchain's going to affect everything. I mean, there's actually, Tim Draper was here. There was a company that he got involved in, eHarvest. It's basically a food supply chain company that would go from farmers to the retailer and cutting out the middlemen, basically, using a token. And do you know how much a food broker charges to get our groceries from the farmer to the warehouse, not even to the supermarket? He doubles the price of that pickup just for the food broker. And that's an easy intermediary to take out. So imagine you just take that out with the blockchain, and your food costs have already dropped. And there's so many more transportation companies that are doing it, that are almost live. It's all happening.
So
One last question.
How do we participate in this venture?
So come talk to us. Malik is here, and we'll hang out and answer more questions and go from there. All right. Thank you, everyone. Appreciate it.